Hey everyone, good morning to all our friends out there. It is time for Trader Talks in today's market. My name is Brent Moores, and I'm sitting in for Kevin. Kevin is actually out at a workshop. He's coming back. He should be back tomorrow, I believe. But today, I am here, and I'm also joined by Ms. Rachel Deshelle, who's joining me. Good morning, Rachel.
Good morning and happy Monday, Brent. Happy to be joined by you today.
Thank you. I'm glad to have you and glad to hear some of your insight today. And how's South Carolina? You're in South Carolina, if I'm not mistaken. There. How's South Carolina today?
It is beautiful, sunny, and warm, and full of pollen.
So if you have a runny nose, we understand there. Very good. All right. Well, just a reminder to everybody, you can follow me on X at Brent Moores CS. We're also joined by Mr. Mike Fairborn, who's in the chat helping us out. Appreciate Mike. You can follow Mike on X as well at Mike Fairborn CS. And a reminder to everybody that the information that we're going to go through today is for general informational purposes only, and is not an individual recommendation of a security strategy or chart type. We will look at individual securities, but there are not recommendations. And the paper money software application, which we will be using, is provided for educational purposes only. Schwab does not recommend the use of technical analysis as the sole means of investment research, and past performance is no guarantee of future results. All investing involves risk, including risk of loss. Now, as probably everybody hearing me right now knows, we've had a couple volatile weeks in the market. And, I don't expect that this week we're going to lose all the volatility out there. Here's the S&P 500 this morning. And just to orient everybody, I have a 20-day and a 50-day moving average on my chart right here. And you can see we're below both, but we've been creeping up. In fact, we're up about 1.5% just at the market open here, and we'll see where that goes. Some news over the weekend. Obviously in the news has been tariffs, and it sounds like the Trump administration is saying that there'll be consumer electronic exemptions for tariffs. Obviously, that is going to affect certain companies because there was big concerns with companies such as Apple and iPhones and how expensive they could potentially be. Well, we'll take a look at Apple in just a little bit, but you can see some stocks I think we'll see are probably bouncing on that news here. And we'll do that in a sec. But looking at the S&P 500, so far, we can see the bounce up. Potential resistance levels, I don't know. What do you think, Rachel? Maybe, so we did have some lows here that we bounced off of. Kind of that represented a high. We're almost there, and that's just about at our 20-day moving average. Other thoughts on resistance levels, Rachel, on the S&P 500?
Yeah, Brent, I think you marked out pretty much the perfect level that I was looking at as well, where it's pretty crucial. We tested it a couple times, gapped through it, and then tried to retest it on that big up day. And then now it's really really matched there with that 20-day, like what you're showing. And we know traders like those round numbers. So 5,500 seems to be that crucial kind of short-term support level too. And another thing that I was watching, and I know we don't have it on this particular chart yet because we have the 20 and the 50-day, but if you even added like a 200-day simple moving average, I know this could be something else that a lot of traders are watching with this price action in addition to the 50-day, because we're really close to possibly hitting a death cross where we're seeing those two moving averages cross while we're also coming up upon this 5,500 level and this 20-day level as well. So a lot of kind of things to watch here in the near term as we retest possibly this short-term resistance.
Yeah, so here's the traditional death cross is the 50 and the 200-day moving average. You can see those just barely crossing here as we're looking at that. So that's a good call out on that. And you can see, if we break above this, and that is an if, probably I would guess significant support up in this, resistance up in this level as well here would be kind of a next significant area, in addition to the moving averages. And if we break back down, of course, we want to hold those lows there. One other thing I wanted to point out to everybody is if we do switch this to, say, a 3-year chart and take a Fibonacci view, so this is just a Fibonacci retracement from our low of that move that started back towards the end of 2022, go up to our high here, and right at our high. And then if you look at the 50% retracement level, that's right where we just kind of kissed right off that level there on that. So that happened to where, it doesn't always work out so perfectly, but that is another, just, as we're looking at these charts, support and resistance are kind of key things that many traders use, many technicians use, and there's different ways of doing it. You use, horizontal lines, diagonal lines, moving averages, price levels, as Rachel, as you referred to, that, the 5,500 level, and Fibonacci levels are all different ways of potentially coming up with that. Let me head back to kind of our 6-month shorter term chart, and you can see the Fibonacci sticking out on that. Intraday, let me just switch this to an intraday chart and just look real quick on this. So obviously we're just opening up here, but if we were to throw on a pivot points, which I know Kevin often does, I'm going to zoom in just a little bit. Here's where we've opened up. Obviously, we gapped up. Here's our R1 level. We're above that. This is a potential support level, potential resistance level intraday. And of course, very likely we'll challenge one of those today, especially with market volatility. But any other thoughts on the S&P 500 before we move on from that, Rachel?
Yeah, I mean, I just think, especially like what we were talking about in the short term, we need to see a change of trend here. Especially, I mean, that will be something that the bulls will be looking for. We can look on our shorter term chart like you show there, and we can see that we're still making lower highs and lower lows within the last few months. So I know some traders will be watching for us to make a higher low or something like that here in the near term to see really a break or a change in this short-term downtrend here.
Right. Yeah. So you can see here's our kind of lower highs along the way, and we're kind of there. We've had lower lows. We'd like to really break that, and then we can start talking about the possibility of an uptrend. But until that happens, I don't think that's in the works there. Let's take a look. Let's switch on over to the, well, let's actually talk about market breadth a little bit here, because as I think a lot of us know, the S&P 500 is often dominated by a few really big companies, and it can certainly skew things, but we do like to see the breadth of the market. There's different ways to do so. One way is, of course, we can look at the SPX equal weight index, and little bit different, but of course, still generally a downtrend on this. In fact, if we were to go to, let's do this. Let's do a year-to-date chart. And let's just kind of look year-to-date on the SPX. We're down about 7% year-to-date on the SPX versus the SPX equal weight. Not that different, not a huge divergence right now on that, down about 6% on that. But sometimes we see a pretty significant change on that. However, one thing I would point out is when we're looking at these, look at the number. This chart right here is a percentage of S&P 500 stocks that are. Oh, let me get out of that percentage view. Percentage of S&P 500 stocks that are below their 50-day moving average. About 22% right now. It's actually going up. It's actually moving up. We were down to about 4% at the market low, which I don't need to tell you is really low, but you can see that creeping up. Any thoughts, Rachel, there on the just the overall market breadth?
Yeah, I mean, we've definitely, like you mentioned, I mean, 4% of stocks when we hit that low, 4% of stocks being above their 50-day moving average. We kind of got to that point last week of those breadth washout levels. And so typically, I mean, if the bulls are going to be looking for some type of breadth thrust here and want to see a lot of participation, a lot of stocks moving on a lot of liquidity if we're going to have some type of breadth thrust here. So that could be something that traders will be looking for this week. But we definitely have the majority of stocks, still nearly 80% of stocks in that shorter term or in that 50-day downtrend. So until that really improves or until we see a thrust from here, it doesn't look too strong as far as market breadth,
Yeah.
market participation, but it's definitely going to be something that a lot of our traders will be watching in the near term to see if it improves.
Yeah, we're
That
going
and
to see.
the trend.
Yeah, and we're going to see a lot of volatility. This is just volume on the S&P 500. You can see the spike we've had. Probably not a shocker here, given the market volatility and just in the news and everything that we've seen a lot of market volume here. But when we look at volatility, let's take a quick look at the VIX here. Implied volatilities down around 33 right now on the VIX, peaking out about 60. Let me go out just a little bit longer term on this. Let's make that a year chart, and you can see the spike that we had back there. Any thoughts on the VIX or implied volatilities as a whole there, Rachel, today?
Yeah, so I mean, it's something that we see obviously because the VIX is that synthetic option of the most actively traded S&P 500 options. So obviously, it's that signal of that fear factor or fear in the market when options traders and investors are buying those options to really protect or hedge their portfolio. So the fact that we're seeing the VIX trending upward or even spiking in the last few weeks as we've seen some of those major down days, it's not super surprising, but it's also telling us, because the VIX also tells us not just the downward volatility in the market, but it's also telling us about the overall volatility, and that's upwards volatility as well. So I know one of the tricks that I always learned was to just kind of see what the S&P 500 expected move of in a day is taking the VIX, I think, divided by the square root of like 252. So for like how many trading days there are in a year. So if you take about 33.5 right now divided by 15.87, that's telling us that there is an expected minimum move in the S&P 500 of at least 2.1%. On a daily basis, just at the level where the VIX is now. So, and again, that volatility can work in both directions. That can be an upwards move in the S&P, that can be a downwards move, but you can just kind of expect some of these large swings that we've been seeing based on that level in the VIX.
That's great. So the VIX kind of gives us this number over here is as kind of an annualized volatility expectation on the market. Whereas, Rachel, I'm glad you brought that up because I actually sent an I don't know if we call them tweets anymore, out on that the other day on the rule of 16. And you were a little more precise than me. I always say 16. It's, I guess, 15.8 or 15.9 or something like that. But that can give you an estimation of that daily volatility move there on that. I mean, 33 on the VIX it's well below where it was, but by most measures, that's still a pretty darn high VIX there that we're seeing, folks. So the volatility is certainly still with us on that. And of course, a lot of times when we're looking at the market, there's uncertainty that we can attribute to, like, well, we're in earnings season right now. We'll look at the earnings calendar in just a bit, but that can certainly add to volatility. There's economic uncertainty, economic events, economic data that can come out, inflation reports, employment reports. We have a retail sales report coming out on Wednesday, which is a pretty big number typically. That's an important one. Chairman Powell is also speaking on Wednesday. That can certainly move the markets, even though it's not an economic report per se. We have our weekly unemployment report on Thursdays. All those can move the markets, but right now, the overriding mover of the market and market volatility is news related to tariffs. Whether you're pro-tariff or anti-tariff doesn't matter. The fact is that there is volatility in the market related to that, and so I think that's one reason. The uncertainty related to that is one reason why our VIX is still at 33. Let's switch on over and just take a quick look at the NASDAQ and the Russell 2000. I'm going to go a little shorter term here. We'll go to here we have our 20-day moving average again on the chart, and that's kind of right where we're at right here. We opened up a little bit higher on that NASDAQ. We're up a little bit over 1%. That's kind of where we peaked out right now. Potential resistance, right about where we're at. Be nice to see a break above that from a technical standpoint. And again, to your prior point, Rachel, the trend has been down. We've had lower highs, lower lows. This is a high here. If we could break above and create a higher high, that'd be a really nice thing for the market. Any comments on the NASDAQ you want to add here before we move on?
Yeah, so I mean, similar levels to what we saw before. Obviously, we're trying to claim that 20-day today, but to your point, I mean, something that a lot of traders will want to see is at least a higher low. You mentioned higher high, but at least bulls are looking for at least a higher low, just to even get us started. But the interesting thing I always like to do, Brent, too, is just to zoom out a little bit. So if you don't mind, if we can look at maybe just the last 5 years, looking at like a weekly chart, just to show the prior cycle of the bear market as well, and look at the level of support that we've found within the last week. So we can see on the NDX, we really held with last week's weekly candle, we really held that support level of those prior cycle highs before that 2022 bear market. We touched that level almost perfectly. So
yeah, we did.
As long as we can hold that in and not create a lower low, again, those are all going to be things that traders and even our long-term investors with that longer time horizon will be looking for as well in a continued possible bull market, and to not get into bear market territory here.
That's a great call out. Let's move on here. It is I don't want to run out of time and stick just on the indices here. Here's the Russell 2000 small caps. They've been the hardest hit of the major indices. Again, probably some resistance up here. You can see the distance. We're not even near the 20-day moving average right now. So we'll see if this can turn around. Certainly, interest rates are probably not helping the Russell 2000 right now. Small caps. And if we go to, say, that longer term chart, let me go to a 5-year chart here. You can see probably some support down here. We didn't get all the way down to these levels down here. That would be a significant break if we break below that on the Russell 2000. Hopefully we don't see that, but there's, Russell 2000 is certainly lagging the other major indices there on that. And I mentioned interest rates, so let's just take a quick look at interest rates. And this is maybe tied a little bit to some other things we're going to look at here. And we can look as we look at some other alternate asset classes here. But in terms of the 10-year, you can see the spike we've had on that 10-year. We've dipped down to about 4.4% on that. We spiked up close to 4.6 on Friday there. But that certainly is something that can weigh the small cap stocks. Small cap stocks tend to have more debt financing. They also tend to have kind of a less secure footing, so to speak, overall. And this jump up in interest rates can be a sign perhaps of some concerns about economic concerns. More people have been buying, well, excuse me, fewer people have been buying bonds, which may be, it's a little bit counterintuitive when the stock market has been struggling, that fewer people are buying bonds, which lowers the price of bonds. It increases that interest rate there. But that's where we are right now. I know for those of you who are looking to refinance a home, that's probably not great news right now. Thoughts on interest rates there, Rachel? Anything you want to mention on interest rates?
Yeah, I think to your point too, Brent, we're not really finding that investors aren't really finding that safe haven in bonds like they've seen, where we would normally in times like this see a rally in bonds, and that's just kind of not what we're seeing here. So it looks like that could be contributing to why rates are spiking a little bit. And even just looking at this time frame that we have here, it almost looks to me, because there's a little bit of a pattern that jumps out to me on the screen that I'm seeing. It looks almost like a failed Head and Shoulders type pattern, where we see a neckline right around that 41 level, where we see the left shoulder that got crafted from mid-October to really the beginning of December. And then we saw that head take place and make that high up at 48. And then that right shoulder just kind of formed throughout March, had that failed breakdown, and then the rally from there. So typically when patterns fail, come some fast moves in the opposite direction. And so far it seems to be like that's what we're seeing a little bit, but that's the thing that grabs my eye from the 10-year here.
Yeah, that's a good catch. I didn't catch that big kind of longer Head and Shoulders pattern that we had on that, but that is definitely there. Let me just head over to the chat real quick and hit those, because you mentioned we weren't finding a safe haven in bonds, Rachel, but looks like maybe we have found a safe haven in some other asset classes I want to get to in a sec. But Probability Trader said, is the death cross significance, is it higher than forming a higher low? Here's what I would say is, as a technical trader, and of course there's no right or wrong on this, but when looking at charts, I kind of have a hierarchy. I look for that trend, and then I look for support and resistance. And of course, moving averages can certainly help inform the trend and help inform your support and resistance. But in terms of trend, if we kind of go to the basic definition of an uptrend of higher highs, series of higher highs and higher lows, that'd be kind of number one for a lot of traders in terms of what they're looking for on the market. And as we said, we haven't really had that uptrend on some of those major indices like the S&P 500 right now. So the forming of a higher highs and higher lows would be kind of the first thing that the most desirable thing, I guess I would say there in terms of a technical look at the market on that. George mentioned the dollar. We're going to hit the dollar in just a sec, but let me hit something else here first, and that is gold. Here is a chart. We're going to bring up a futures chart. We're not trading futures today, folks, but I want to use this just as an indication of the price of gold. This is Friday. Friday, we hit a high, all-time high on gold there. And today we kind of have this little bit of a Harami pattern, but that's real short term. I mean, the overall trend has been pretty significant, but it goes beyond just the 6-month chart. If we go out longer term, Rachel, we hit some more significant things as well. What are your thoughts on that? I'll go out to a max monthly chart.
Yeah, that sounds great. Yeah, to your point, Brent, I mean, we look at this chart over the last, what is that, over 40 years of
So that's 1980, folks, back down there. Yeah, exactly.
we can see that gold, especially just this year alone, has made such a move compared to even just the last last couple decades or so. And it's interesting that gold is kind of still taken as that safe haven, where investors may find that flight to safety with this latest pullback, correction, whatever we want to call it, that we've had. And it's really one of those assets that's making new all-time highs, where everything, nearly the majority of other things in the market, are not near their all-time highs. So that's definitely something that we've been watching, and something that I know a lot of investors are watching too, as far as where is that safe haven, where is that flight to safety amidst this correction that we're seeing.
Yeah, lots of that is kind of I think the most obvious level of where people one asset class that people are putting money to. It is interesting, these gold chart, whenever I think of gold, because you can look at performance, and lately the performance has been undeniable, but there's certainly been a lot of years where gold has been kind of a dud in terms of, hasn't been invested in so much for spectacular performance, but people do invest in gold also to help add a lower correlated asset to their portfolio to try and help with the overall volatility, the overall standard deviations of their portfolio. Gold is one means of doing that. Let's change that chart to silver here, Rachel. So here's the long-term silver chart on that, and thoughts on that long-term silver chart?
Yes, so I see a resistance level right at $50 or so that we're seeing on silver. We can see that's been touched a couple times in, 1980, again in maybe 2011 or so. And it looks like we are forming almost like a larger cup and handle type pattern, is what it looks like, essentially in silver over the last 45 years or so. And obviously we won't know this pattern until it's complete. It may take more time to really build out, but something that we typically see when gold starts to outperform, silver kind of usually kicks in as its higher beta alternative, and then eventually ends up outperforming gold just because it does have a higher beta. So if investors are finding that flight to safety, that diversification within their portfolios, like you mentioned, Brent, it may start to lead into some of these other metals like silver, which is that higher beta alternative, where they may find an additional kind of flight to safety and catch-up trade there.
Great. Appreciate your comments on that longer term chart. And as we go shorter term, you can see the, very different than the gold chart, but the last couple of weeks it's been, real strong performance on that. And by the way, if ever you are interested, a little side note here, if you ever want to know how is one asset class doing compared to another, of course, you can do a comparison chart. Another thing you can do on the Thinkorswim platform is you can put the two together and put a minus sign between them. Not oil, let me do gold. And is that going to work on my futures? Yeah, so basically what this is going to do is it takes the first asset class and subtracts the second, and the direction tells you which is stronger. If I'm subtracting the price of gold from silver, this chart is going, and it's going down. That means gold is outperforming silver. Whereas if the chart were going up, those periods, that means silver is outperforming gold. You can do that on other things. I want to compare, I don't know, General Motors and Ford. I can do GM minus Ford, and I can see which has been outperforming. Well, in this case of late, and this is only a 6-month chart, you can see the direction this is going. The difference in the prices, so this is reflecting the difference in the prices, has actually been going down, meaning Ford has been outperformed. Now, that doesn't mean Ford has been going up, or it doesn't mean GM's been going down necessarily. You got to look at the individual charts on that, but it does give you the difference between those. So that's just a little trick on Thinkorswim that some people may find helpful there. Okay, any other thoughts on gold or silver or Rachel? Let's look at the dollar, unless you have something else there on that.
I think we can look at the dollar, switch to the next one here, and I have a couple levels that we're looking at.
Okay, so here's the dollar. Again, I have a 6-month chart. You can see the trend on the dollar has not been strong. And, in general, when rates are going up, that can be beneficial for the dollar. Doesn't seem to be helping it right now on that. In other words, look, if a country is paying a higher yield on their treasuries, then it makes it a little bit more desirable. But that doesn't seem to be saving the dollar right now. The dollar is in this decline. I guess maybe I need to zoom out. Let's see if we can find a low. Well, here was a significant low. That we're kind of right there, aren't we? We're still testing that this is from last year's lows. I don't know if that's a break or if it's trying to hold that level there, Rachel.
Yeah, I mean, even we could zoom out even to a 3-year too, and we could see just the validity of that level that you carved out there.
Yep.
Look how many times that it's been touched.
Yep.
So that's been a crucial support zone. I mean, it's not a straight line in the sand. It's almost like a little zone in the sand, so to speak, because it's not perfectly touched right around 100 or so, but it shows that zone that it really rests around that 100 level, where it's tested it now for the 6th time, and now we're right below it. So we'll have to kind of see if this ends up being a failed breakdown of this support, where we may have a reverse in the other direction, or if this is going to be a true breakdown. And we won't really know until we wait for a couple closes below that support level. And for our longer term traders, maybe it's 2 weeks of closes below that level. So whatever your, I guess, time horizon is, whatever your confirmation rules are, we won't really know if that is a confirmed breakdown until we have those possibly multiple closes below.
Yep, support. Great. Wonderful. So we'll look to see if that can change things. Let's take a look today at the sectors here. And so I have 2 columns here. For those of you who are interested, this list is just a public list, S&P 500 sector indices. I have a couple columns here. One this is just today's change. This is a percentage change over the past month. And if you want to add these, by the way, you can click on the gear, go to customize, percentage change, and then percentage change since I've added. This you can customize. If you look at it, scroll over, I have it as a month. You can change, there's different time frames you can choose on that though. And when you look at that, so if I want to see how these sectors have been performing over the past month, here's kind of low to high, so worst up here. Energy, that's the winner right now in terms of the losers, I guess, of over the last month here. Energy has broken down. Thoughts on energy, Rachel, here? Break below a potential support. That certainly didn't hold. Bounced off the lows. We can look at oil too and see that's not faring very well either.
Yeah, it's energy has been one of those sectors that has really been in a sideways moving pattern, really for, almost 3 years now. We had oil when it went negative back in 2020, and then had a massive run up. And then just the last couple years as a sector, it's really just been in a sideways moving pattern. So to your point, Brent, I mean, it's kind of something that we're seeing where we're seeing a little bit of a possible breakdown in the energy sector, even in oil in particular, which obviously oil prices drive a lot of those energy companies. So that level in the sand that you're drawing out right now, probably around 68 or so, is going to probably act as that near-term resistance in oil there.
Yeah, and oil can be probably not this isn't a guarantee of what economic performance is going to be, but oil can be depressed when expectations for demand are lower. So that's kind of a demand side view of it. And that can be just a comment on expectations of overall economic growth and activity there. So that's the oil price. But now here's another thing. As we're going back to the sector view, let me go back and do this. Here's our sectors. What I want to point out, though, in terms of the best performing sectors, the two top performing sectors have been consumer staples and utilities over the past month, that is, which are kind of a little bit more defensive not a little bit more, these are definitely more defensive sectors. In other words, sectors that tend to do better when there's more market jitters out there, more economic jitters. So probably not a surprise that those two are outperforming right now on that. There any other comments on any of the sectors that you want to make here, Rachel, before I hit up some individual stocks as well?
Yeah, I think to your point, the utilities and consumer staples, those are typically the quote unquote equity safe havens. So those funds that still have to stay long only, they have to rotate somewhere in the market. And so when we have pullbacks like this, corrections like this, they're going to find those sectors that obviously perform well in the most defensive or risk-off environment. So it's no surprise here that we've seen a ton of leadership this year, I mean, year to date, in utilities and consumer staples.
Yeah, good. Okay, well, hey, it is Friday kicked off earnings season, folks, and earnings season is the start. It starts with financials typically, and Carol said, how are financials going to do? Well, I think it all just depends on well, let me just go back to this. It depends on what the earnings come out to be. And also, even if earnings are good, if we have a negative news reaction to things like tariffs and whatnot, that could even significantly damage these companies, these financial companies, even if the earnings are good, and vice versa too. If we get a lot of good news that the market perceives as positive, even if the earnings are a little bit more so-so, that could help them out. This morning, Goldman Sachs released earnings, and I've not even actually seen the results on this yet, but up about 2% today here on that. So that's today. We've had if you want to see the earnings calendar, you can always go to MarketWatch, go to calendar. I just have the S&P 100 right now up. George said something in the chat. He said earnings will be cloudy on projections. And that's definitely true, I think, is a lot of companies are right now, the concern is we have less visibility as to the economic future because there's just less certainty than there is there's never certainty. There's always uncertainty, but there's less than typical, significantly less than typical. So it's harder on these earnings calls for the company, the CEO, the CFO, to project for the future what their sales are going to be in this environment right now. So we're kind of driving in a kind of a heavy fog environment now. And a lot of times that is what drives company earnings, is not so much or drives the market reaction to company earnings. it's not so much what the earnings actually was, it's what their forecasts are for the future. But you can see, let's see, today is the 14th. So here's Goldman today. Again, this is just S&P 100 stocks I have in here. But you can see on Friday, we had Wells Fargo, JP Morgan, Morgan Stanley, BlackRock, Bank of New York Mellon. Tomorrow, Bank of America, Citigroup, Johnson & Johnson. So when Carol in the chat said, there's financial companies earnings, do you see the commonality? A lot of financial companies there. Now, there's a lot more companies out there if I open this up to every company out there, but these are the biggies. That's what moves the market right now. But as Carol mentioned, guidance is going to be a little bit more reserved right now than normal on that there. Earnings calendar, and of course, it's just going to get more and more as you scroll down the list. There'll be bigger names. We've got Tesla, and then we're going to start, at some point, we're going to start to see some of the biggies like Apple and Amazon and whatnot there. Any companies in mind, Rachel, that you're anticipating for earnings here to look at?
I think what you mentioned with just keeping an eye on the financials too, and I think the thing to remember that I feel like a lot of investors or traders kind of tend to forget too is the market is a leading indicator, price is a leading indicator. So typically, if we are kind of seeing recessions or earnings recessions, it's going to show up in price first. So just kind of keeping that forefront of mind. Obviously, with earnings coming up, there is going to be elevated volatility going into some of the financials with earnings as well. So that's also something to keep in mind too, is just that volatility leading into that uncertainty. And you mentioned that before, Brent. The market does not like uncertainty. And so when it is uncertain, we may see a volatile market in both directions. So just a couple of things to keep in mind there with this earnings season.
Wonderful, wonderful. Let me just hit up a few stocks as we're running short on time here that are in the news. One, I mentioned the potential consumer electronics exclusion to the tariff scenario. You can see Apple's reacted nicely today, up almost 4% off its highs of the day, but still, given Apple's performance, which has been very poor this year, 4% is nothing to sneeze at, I guess. So that's a positive thing on Apple. Another couple companies that are in the news here. I have. Actually, before I move on from Apple, let me just point this out. This was a low. This was probably a significant area. It'd be interesting if we can hold this level, which, by the way, just happens to coincide with that 20-day moving average there. That would be kind of a key win for the day, so to speak, here on Apple. And if I were to go intraday on this, you can see where we'd like to close. I don't know. We'll see. There's a lot of day left in the stock here. Let's move on. Let me just mention another couple. Intel. News on Intel. Intel's up 4.5% today. Bloomberg reported the chip maker is close to a deal to sell a stake in its programmable chips unit. And so that's largely, the whole market's up a little bit, I think, right now, but that's giving this extra boost of up 4.5% there today. And let's hit one more, and then we got to wrap it up. Here's BP, up about 1.5%. BP announced a promising oil discovery in the Gulf of Mexico. This is a joint venture with Chevron, I believe there. Okay, we're just about out of time. Hey, Rachel, before we go, remind everybody what you do day to day at Charles Schwab.
Well, I am a regional investment strategist, so I work with our self-directed investors and traders to just really help discover more about what your research process looks like, what your trading or investing strategy is. And I help position all the different tools, resources, and platforms that we have available for you to be successful as a self-directed investor or trader here on your own at Schwab. So thank you again for having me on today, Brent. It's always great to join you and flip through some charts, but I hope you have a great rest of your week too. And thank you all for tuning in.
Thank you, Rachel, for joining us, and thank each of you for joining us. And thanks to Mr. Mike Fairborn, who helped us out in the chat today. Always appreciate Mike. And everyone, I hope this week is a profitable week for everybody, not just financially, but in other ways as well. Thanks for joining us today. Have a wonderful rest of the day. Bye-bye, everybody.